Good morning. It's Friday, June 30th, the end of the quarter. It's going to be a light. I mean, I can't imagine people haven't left for the Hamptons yet. You got the big head up here on YouTube. I'll start off with the big head. I can't imagine. I mean, if you're making a couple $1,000,000 a year on Wall Street, I'd assume you leave either at lunchtime or you leave, last night for the Hamptons, or you've got enough money that you're taking a helicopter out to the Hamptons. You're not sitting in the Hamptons traffic. For those of you that may not know, the Hamptons is the luxury beach area that Wall Street goes to on the tip of Long Island. My guess is just to get in the doors at the Hamptons, you have to have a net worth of somewhere in the neighborhood of 20 to 50 million bucks. Just to get in the doors. So, and then you got your hangers on and blah, blah, blah. Let's start off the podcast with a thank you. Anybody that signed up for the paid newsletter, I'm completely overwhelmed with how many of you have signed up for the paid newsletter. Not that I don't think that it's worth it. I do think that it gives you an opportunity, but I'm overwhelmed. I never started that thing to actually, start charging people, but people are so kind. The setup note from last week was great. I think it provided a lot of people with a lot of great information. Again, $7 a month or $70 for the year. I will be doing another one this weekend about indicators. How I set up my MACD algorithm and some of the videos that I've watched to learn it, some of the articles that I've read in the past. I've got my notes, so I just have to turn it into kind of a newsletter. So I'll do that for you this weekend, but I want to thank you all for subscribing. My goal is to make it worth it. And if it's not worth it, you need to tell me that it's not worth it. You need to tell me what you want to learn, and I'll put it out there for you. But the reason I'm saying thank you here is because a lot of you, while you're making the payment, have written a nice little note. I read all the notes. I get all the notes and I read all the notes, and it makes my heart fill with joy knowing that you guys are learning stuff. But I can't reply. And it's creepy as AF, as the kids say, creepy AF, if I were to just email you out of the blue a thank you. So I'm not that person. It would make me cringe, have the douche chills, as they say. But yeah, I would cringe if somebody just out randomly kind of, hey, thank you for the comment and blah, blah, blah. But I really do want to thank you guys. Now, second thing I want to tell everybody is there's been a lot of feedback from this. This is the 50% off July 4th sale. Over Memorial Day, I got probably, a lot of messages. Let's just say I was responding to a lot of messages. Hey, let me know when the 50% sale on Trendspider is again. The only sale that I've ever seen Trendspider have was one Black Friday sale that was 70% off. And that was Black Friday. So between now and Black Friday, for a 70% off, it's about $100. If you don't think between now and November, you can make $100. Yes, it's $390 a year. You may save $100 more by waiting till November. But if you don't think you're trading enough to make $100 between now and November to get that back, don't get it. And who has the time over the holidays? And trust me, November and December, it's light trading volume. It's great to learn on. This is the time when you want to get Trendspider, when we're at a high. And Trendspider can try and protect you from the low. So you get my algorithm, you get everything. It's 50% off. The link is down below. It's in my link tree, and I updated my link tree right up here. linktr.ee/daily stock pick. The link tree, the top one, is 50% off. Go and get it. And you need the middle level, elite. Do not get the essential. That's crappy. I mean, it's charting software, but you can get that on Active Trader Pro and stuff. Get this middle level, elite, and I need to make myself small so you can see it. Elite right here, the middle level. That's what you want. Elite Plus is really for extended traders. I have Elite. Just personally, this is what I pay for. This is what I pay. I think it's, I usually get the 50% off and I just renew for a year. So I really, really think if you have a large enough trading volume, meaning dollar-wise, I kind of put it at $5,000, $10,000 because it is $400 for the year. You have to make sure that you're trading enough. You have to make sure that your portfolio is valuable enough. It's like having, people pay for a financial advisor. They provide you a hell of a lot more than charting stuff. But in my mind, I want to do it myself. And if I can look at these charts, understand that there's an algorithm that tells me when to get in and out, it kind of makes me feel a little bit better than a financial advisor saying, truth be told, my financial advisor, get out of Bitcoin. It's too dangerous. You're too highly concentrated in Apple. Yeah, who wants that kind of stuff? I created a covered call ETF. So all of the covered calls that I've seen, that I know about, that I personally have bought. I think I bought XYLD in the past. I bought Jeff Q in the past. SPYI I currently own. All of these I put into a list up here on the right-hand side. It is in Trendspider. I will have it in the welcome letter if you're new. If you're not new, I will put it in the newsletter today, a link to it. Essentially what you do is you click on this link, and I'll do it for you right now. You click on that link, and it's login and import. That's it. You can sign up and import. I can include this for you, and you can sign up and import, but just log in and import. So get the newsletter. That list will be in the newsletter today. The other thing that I will include is an Investopedia article. If you don't know Investopedia, bookmark it. But here's the benefits of a covered call ETF. These things don't trade a ton. You shouldn't trade them because the benefit is the dividend that it comes out. The good news is there's a tax advantage for some people to it paying a covered call premium versus an actual dividend. The yield is like 12% on a lot of these. So I include that. I will include that in the newsletter today. There will be an article and a link to the actual thing. Kevin from Facebook posted that a few days ago I had posted, Trendspider had said, hey, in the queues, we perfectly timed the top using this Theta Warrior pivot on Trendspider. I think Kevin responded to me, is it timed? Is it manipulated? I said, no. I said, it's just one of the indicators that I don't necessarily use on Trendspider, but they have tons of them. I'll include in the, if you're not getting interested in Trendspider yet, some of this stuff might make you want to go. This is another indicator, a go, no-go trend. Kevin, I'll leave the link to the essentially what he said they were great. Trendspider, he couldn't understand the Theta Warrior, so he reached out to them. This is part of the reason why I went with Trendspider against other software platforms, is they provide one-on-one training, at least when I had it. I don't know if they still do, but it was one-on-one training. Also, I could message them. And if I had any question on an indicator, they would help me work through it. They helped me set up my algorithm. So those guys are unbelievably fantastic. This Theta Warrior TW pivot, it's in there. It's automatic. It teaches you how to set it up. Kevin was like, oh my God, I reached out to them. They sent me this article. Now I know how to use it. One that I use is this go, no-go trend signal. I've used it in the past successfully. It was written. It's kind of like an algorithm that's built into the system that you don't even have to import. It's just a signal level up there. So Trendspider has a ton of things that I don't even use. I don't put up here. I don't identify. It is so much deeper than, but I was glad that Kevin said, hey, the customer service at Trendspider was great. Today, Apple, your boy is long Apple. It will open as a $3 trillion company. I think it's 191. It closed yesterday at 189.60. It's going to open up at about 191 or so. That makes it a $3 trillion company. So what did your boy do? Your boy went on BARD. And I first asked it, what stock price, what share price would Apple have to be at to be a $4 trillion company? And first BARD came back and said, oh, Apple has 100% gain, to be a $4 trillion company with a share price of $233, I think it said. And I said, ooh, that's crazy because it's not 100% from 190 to 233. So I realized they were valuing Apple. BARD was valuing Apple at $130 a share. Wouldn't you love to buy Apple at $130 a share? Let's go back to last year where you had the chance, and I said load up the Brinks truck once it dipped below 120. Hopefully people did, and I know a few of you did. I think Zephan wound up getting in there for that price. Hopefully he didn't sell. I kept telling him at the 170s, don't sell, just hold on. But I had to retrain BARD. So I said, what is the current share price of Apple? And then I asked it again, what would it take to be a $4 trillion company? It said if Apple had a market cap of $4, the share price would be around $234.72. That's a 30% premium of its closing, or where it's currently trading at $188.94. So they're expecting Apple to be a $4 trillion market cap company somewhere in the neighborhood of 2025. If I told you that you could get 15% per year out of a stock, would you buy it? Because I think that's where you get to by the time we're in 2025. Now, here's the other thing. And I posted this in the private Facebook group, and I will post the entire response from BARD on the newsletter. So sign up for the newsletter. There's a ton of things. It tells you about the risks, why they think that Apple will go. And mind you, BARD is a Google product. There is no incentive for BARD to pump up Apple. But it says, yes, we think it will get there to a $4 trillion. Apple has been on a steady growth trajectory for many years and expected to continue to grow in the future. This is what BARD tells. This is AI. So, Google has every incentive to, as a competitor to Apple, to try and say, it might be not that great to get to $4 trillion. But here's what you have to understand. It's not going to be just a 30% gain, because that's the amount of shares that Apple has out there today. They buy back somewhere in the neighborhood of $9 billion a quarter of shares, and they retire a large amount of those shares. So if we go over here to Finviz and we look, shares outstanding, 15.79 billion, they may retire close to 1 billion shares by the time it gets to $4 trillion market cap. And what does that do? That even further drives the price of this stock up. So be aware, this is a great stock to own. I continue to say, hey, I think you should own this one. I don't think there's a downside to Apple. The only thing that I will say right now is this is it's at its all-time highs. I mean, it's been such a meteoric rise from January till now. You can see on a weekly, you barely lost confirmation. It's at its all-time highs. What I might do, and there were some folks that were saying on CNBC last night, buying a covered call on Apple if you own it is probably a good strategy, because from here we might go down just because it's at all-time highs. It's a little bit scary to be up this high. If you wanted to maybe play a little bit and you don't want to do covered calls, AAPD, this has been a loser. There is no reason to think that this will absolutely turn around. There's no confirmation in this. Again, Apple has just been going up since January, so this has been going down. But AAPD is a bear. So if Apple goes down, this one will go up. I would not suggest buying it today into a 3-day weekend. I think Apple has the momentum to hit $200. I don't think it stops until it gets to $200. I am not playing this one, But if I see Apple start to turn because it's been on that meteoric rise, AAPD is in my wheelhouse. I may buy covered calls. I'm not a strategist as far as great with options. I'm just not that guy. So it might be a little bit of a problem for me to buy a covered call. Instead, I'll hedge my bet with AAPD. That's what I would do. Two charts I want to show you because we talk about Tesla a lot. But there's two charts that Trendspider posted last night on their Facebook. And they're side by side. And it's Rivian and it's Lucid. Both of them have gaps on the daily. So if you look at the daily here, left is RIVN, that's Rivian. You're approaching this gap at about 1578. It's got a gap all the way up to 18. Gaps are like magnets. Sometimes they get filled. Sometimes they get rejected. You can see Rivian started to close it. Once it starts to close it, it should end up closing it. So maybe that's to like 16. I'll go back to my active Trendspider and take a look at that one on a daily. But Lucid is the other one. What I want to point out with Lucid, and the key point here is that look down below. That's volume. Look at the increase in the volumes. Now, what we have to know about Lucid is, in my opinion, specifically with Lucid, it's a trade. You don't have a $140,000 vehicle without incentives from the government to pay for it, without a lower cost vehicle in production, with production problems, without a charging network. There's everything in the world. Remember, the CEO of Lucid, he's the former engineer who engineered the Tesla Model S when it became pretty much what saved Tesla. But he started to do the Model 3 but wasn't involved with the Model 3. The Model 3 is what pushed Tesla to become a profitable company. Lucid needs that low-cost vehicle like Tesla did. Until that happens, don't invest in this stock. You trade the stock. Absolutely 100% trade the stock. So let's pull up Rivian first, and I'll pull up Lucid second. But if we go into the algorithm here, Rivian has a buy at 1564. You're trading at 1625. It's up 1.5%. So if we go and we look at the daily to try and see where this gap is, you can see it's a rising wedge. If you got in there at 12, great. Kudos to you. But if we pull up that gap snake, this first gap here is up to 1710. So you buy at 16, you get to 17. Not a bad trade right there. Were there two? Yeah, there's two gaps on Rivian. It goes back to February. Let's see. I do see February. I don't see the second gap. Oh, I do. Here's the gap snake. It's up here between 17 and 1840. So you started to complete this gap. I fully expect this one up at 17. It's trading at 1603 right now. Fully expect that one to fill that gap at some point in time this year. Rivian's a good company. They've got some great vehicles. They have enough money to make it through. They do have production issues. They announced their partnership with Tesla as far as the charging network. Of the two, I think you could invest in Rivian. Just realize Rivian, the PE is absolutely crazy. They are losing $6.5 billion. They will only have a $15.54 billion market cap, but they have 930 million shares out there, $11.59 per share. They have plenty of cash. These guys are backed by Amazon. They have plenty of deliveries to try and close that gap. It's just an expensive thing. Building cars is expensive. So, the average share target price is 23, and you're trading at 17. I mean, come on. It's a good company to invest in. Unlike Lucid, which had, by the way, the largest, the Saudis just put in, $21 billion or something. They just bought a ton. And you can see that volume is rising. 609 was the entry. You're trading at 672. Your first gap here, which started to get covered, is 697, all the way up to 758. You got another gap here between 809 and 824. And your final gap is between 922 and 971. I think you trade around these gaps. I think when it fills this first one, I don't think it fills all these in one run. You do have confirmation right now. That is because the Saudis have bought a ton of this stock. It has used that 200-day as a resistance. So I don't think that it gets up here until you have some type of big catalyst. So I'd be careful of both of those. JLBY, which is a kind of a human drone taxi, unmanned vehicles for human flight. They flew their first one yesterday. So as the anchors on CNBC were touting liftoff. Yeah, whatever. Way to be funny. Way to be giddy. But you can see this one, I mean, it's a falling knife. But if you invested in this one back in April 27th, this is what the algorithm loses you a lot of money on this, 30% versus buying and holding only loses you 1%. So the algorithm doesn't necessarily make you money. What I do want to point out is the 65-minute algorithm. The 65-minute algorithm makes you 177% versus buying and holding makes you 116%. That time frame to make 177%, 8 months, 88 positions. This one got you in at 635 right here. If you're up at 10, you've almost doubled your money in what? One day? June 27th? It didn't know that they were going to do a manned flight. It didn't know that they were going to have this kind of press release. You got gaps, but again, as you get down into the lower time frames, gaps are a little less important. But I did want to bring this up because the 65-minute algorithm is really good for a stock like that has some volatility in during the day, specifically when you're coming down. It just got you back in. The 4-hour one just got you back in at 893. Let's see. SoFi. Today, I think we're going to get the Supreme Court decision on student loans today. I think it's soon. But here's the SoFi. SoFi is a $10 stock if they announce that Biden can't waive the student loans, because SoFi will be the beneficiary of that. They will absolutely 100% be the beneficiary of that. Student loans pick up in September. So I think SoFi is a $10 stock. Should you buy it here? The algorithm says no. The 4-hour algorithm doesn't have you in. It has you out. It just got you out with a 68% gain. So this one loses you 39% on Roblox. On SoFi. But if you bought and held, you've lost 52%. So the algorithm does outperform on this one. Roblox, I brought up. Roblox under 40. Roblox is over 40. So it opened over 40. You could have gotten in pre-market below 40. I went over this line right here, $40. That's where you want to buy it, under $40. If you buy it under $40, you can ride it up to 42, up to 44. You can make money. Just have your stop losses tight on this one, because this one could fall pretty precipitously. They are based on users. So as they announce user base, they'll announce some users the first week in July. If the users are up, this thing will soar. If the users are down, it'll just flop down. When it goes down, it's a buying opportunity. Nike announced yesterday they missed earnings, but their revenues were higher. Inventories are the problem. China sales are up. Right now, there's a value trap for this one. If people are looking at Nike, I think this 104 level, I think it goes down to 100. I think you can wait for it to go down to 100. I just don't see it as a good buy right now. Somebody asked me about options on BOIL or KOLD. I'm not picking an option price on BOIL or KOLD. I'm not. There's no way anybody can tell you, oh, absolutely buy an option on this one and it's going to go up. No, you're just gambling at that point. This is a triple levered ETF on natural gas. If you want to buy one or the other, my bet right now would be on KOLD. But understand, you are just gambling. KOLD has a buy in the 4-hour algorithm. It's 61.21. BOIL has you out. Now, on the 65-minute algorithm, if we were to run that, which is probably a better algorithm to run, KOLD has you in at 59.21. And it just crossed up yesterday afternoon. BOIL on the 65-minute algorithm has you out. You don't have confirmation. So if you're asking me about options, short term, I think KOLD is the option. Long term, I think BOIL is probably the option. And if you want to run these, just get Trendspider. I give you access to both the 4-hour and 65-minute. Like I said, AAPD, I have this. AAPD is the play on that one. Now we're going to go into something that's not Trendspider, that is free. Sam from Facebook, he said, hey, I listened to your podcast at lunch. I can definitely say I learned a lot. Would you be willing to cover some more in-depth uses for Finviz for us little guys who can't afford Trendspider, who want some free stuff? Yes, I can. Absolutely. I will put 2 videos that I found on YouTube that have absolutely incredible setups on Finviz. Finviz has a screener. So if you go up here to the left-hand side, first off, you should absolutely be a registered user of Finviz. That way you can save things. So first off, register, get yourself a username. Make sure you're registered on this. The screener is incredibly powerful. So last night I watched a couple of videos, and all I did was go on YouTube. And what I want to show you are some of these plays that I learned in earnings growth. So what this one does, earnings growth, all of these are scanning tools. Don't ask me what they mean, because when you hover over it, it says exactly what it means. If you need more of an explanation of what this is, type it into Investopedia, okay? Understand that Finviz is delayed. So it's not a real-time scanner. It's looking for trends. It's not looking for, should I get in right now? It's looking for trends. So you will have to do a lot more work on something like Finviz than you will on Trendspider with the scanner on Trendspider. The Trendspider scanner is absolutely 100% live data. You can scan on 1-minute charts. You can scan on monthly or yearly charts. The scanner on Trendspider is significantly better than the screener on Finviz. But as an investor, I use both, because there are some things that Trendspider can't look up, like PE, like market cap, like price to sales, like analyst recommendations. It's a charting program. So it's 2 completely different things, but it doesn't mean that you're missing out if you just use Finviz. Just understand, you're going to have to do a little bit more work. So I'll post those 2 videos in there. If you want charting stuff, what I would do is get Thinkorswim or even Active Trader Pro. You can see my Active Trader Pro here. By the way, your boys in Sedge. Your boys in Sedge at 250 something, I think 253 or so. I bought Sedge. Yeah, it's at 263. That one's going to 300. At some point in time this year, it'll be 300 and I'll sell out. Then I'll wait for it to get back under 300 and I'll buy it again. But yeah, I bought Sedge. That's why it's up there. But understand, Finviz is not a charting program. It is a screening program. If you want a charting program, go and look at Active Trader Pro. Put some money into Fidelity. Put some money into Webull. Webull, use the link down below on my link tree. Go to the link tree, and you can see right down here, join me on Webull with a 1K account trading. I just put $1,000 into Webull. I use their desktop software. I liked it, but I like Active Trader Pro more. Oh, I got to show you the here. That's my link tree. And then down here, under support the podcast, there's join me on Webull. And it's right there. Join me on Webull. You can see it. Yeah. But Finviz, let's look at these Finviz charts. I've got a bunch of ones that I've saved. Earnings growth, bounce plays, breakouts, oversold stocks that are bouncing, buy and hold, comeback opportunities. Comeback opportunities, I don't see any in that. I have not perfected this one, so I haven't put this one in. But all of these other ones, buy and hold, this screener, these are price above the 20-day. Earnings per growth over the next 5 years expected to be over 10%. Return on equity over 15%. Current ratio over 1.5. Again, if you need an explanation, just hover over it. It gets it there. If it's not enough of an explanation, go. What I'd like to see you to do, and by the way, I would probably, you can change these once you've saved them. You can change them. Like, let's say that we want market cap. I want mega. Let's see if there's any mega on this one. Yeah. So NVIDIA and Tesla. Those are two that are absolute buys right now that you could look at. Yeah, they're high. But, this is what you get with Finviz. If you want to go over a charting program and you want to use Finviz with, Trendspider, yeah, that's your optimal setup. Like I said, I can't trade without Trendspider. But Finviz, you're going to get the screen, or you're going to be able to find the stocks that you want. Again, Finviz, I'll include these screeners. I'll include the 2 videos that I found on YouTube. And I'll include, let's see, it's 1, 2, 3, 4, 5 screeners that I set up that I'll include the links to. And you can customize these however you want. But this whole thing right here, I will not do it justice by going over it. There are YouTube videos. There are articles on this. There are a lot of things. Just understand, up here to the left is where you save your presets. That's where you save your screeners. Make sure you sign up. Make sure you just over to all, and you can use this stuff. Now, there's back tests. This is for Finviz if you want to pay for it. There's crypto on Finviz. There's Forex on Finviz. There's futures. All of this stuff, except for the back test, and I think some of the advanced screeners are free. Finviz is the greatest tool. If you're not using Finviz, you're really just kind of guessing at stuff. Finviz is awesome. There are so many ones that showed up on the scanner today as far as opportunities. I'm going to include the list in the newsletter. There's no use in me going over all of these. I just don't think that I should go over all of them. But the list is long, specifically energy, specifically financials. ARKG has a cross up. We went over ARKF yesterday. The 2 that I would invest in myself are ARKG, because I know nothing about genomics. And I think this if you just look at this one, I mean, this, again, genomics is coming back. Look at this. This was a $100 stock. Don't tell me it's not getting back to $100. One thing she's good at is genomics. So this, in my mind, this is completely undervalued, and you haven't missed the run. Again, this is probably a 5-year kind of time frame on the genomics at least. But you can see, if I pull this back to its highs back here, there's still people holding up here at 81. So it will get back up there. Most of these are probably ARK employees. But ARKG, ARK, I think there was another ARK. I know we had ARK W the other day too. Let me see. Michael asked me about Carvana. Here's what I think about Carvana. So Carvana was heading into bankruptcy. They sold off their inventory at a complete loss. This stock was written off as dead. Nobody wanted this stock. It got down to $7 here in May. And they somehow made a comeback. I don't trust it. You go to Finviz and you look, they're losing $1.4 billion. They only have a $4.61 billion market cap. Its short interest is 50%. I think you're dealing more with a short squeeze. Now, here's what I will say. You're up year to date 456%. 456%. Over 1 year, you're up 14%. I do not see this business as growing. I see it as maybe coming back. But I'd be a little bit careful with Carvana. If you've got, I don't think this is one for you to YOLO. You can see the algorithm got you in here at $7.34. I would probably trade this on a shorter time frame. I don't know enough about the company, but I will tell you that losing money does worry me. The average target price, you're trading at $26. The average target price is $14.58. So the other thing that you have to know is the book value. We talk about book value with banks. The book value, which just means the value of the real estate and everything, It's minus $6.23. It's not worth any money. That's the thought on Carvana. Now, in November, you had a bunch of people buying, small amounts of buys. I mean, this guy, chief product officer, Daniel, he bought $1 million worth at $762. Is he happy? He's over the fucking moon right now at $26. But I just don't think it's worth the risk, to be honest with you, Michael. I figured I'd go over that because I've had a couple of questions about Carvana. Okay, newsletter this weekend. It will be paid. It will be indicators. Don't feel like you have to subscribe, because what I'm planning on doing is selling all of the paid stuff at one point in time. It will be more than $70. I will charge probably a lot just to make sure that the people who paid for a year get the benefit of the year and the discount on the year. But I will do this over 1 year. So, I'll do 12, 15, 20 kind of things. And I'll sell the PDF for a lot more than the yearly subscription. So if you're paying monthly, fantastic to you. You will pay probably a little bit more than $70. I'll space these out a little bit. I want people not to be, feel like they got screwed out of a paid subscription. So that's the reason for that. I was planning on selling the PDF for like $20 or something like that, but it'll go for a little bit more. It will include more than I originally planned to. So if you have any questions, hit me up. Remember, the offer expires on July 4th. So I will be back on Monday, but this Trendspider offer expires July 4th. Get it. Once you sign up, send me a message on the socials. Go to my link tree. Send me a message on either Facebook, Twitter, on Instagram, or email. Email's over here on the right. And what I'll do is I just need to confirm that your email address is under my program, and then I can send you the welcome letter. That includes, it's just point and click, import everything. And if you're a paid subscriber on the newsletter, you get the paid content. This is my setup on Trendspider. It's from June 24th. This will allow you to absolutely 100% set up your screen exactly the way I see it. The way you see it on the screen every day. One thing I will point out to you as well, once you get Trendspider, I absolutely think you should go over here, and even before you get Trendspider, go over here to my channel, and you'll see, I'm live right now, so it won't show, but there's a Trendspider video right here, and it's for every subscriber when you sign up. When I'm not live, it plays for you automatically here. I will include it in the newsletter as well. But that one right there is what you want to watch. It's myself and a man named David Yoakum from Trendspider. We set up our screens. We go over everything. It will absolutely guide you through how to set up your screen. Once you get the welcome letter that I send you, you'll just be able to plug and play. So I want you to have a good weekend. Hopefully you don't have a lot of traffic where you are. I will be going to New Jersey next week. So more than likely, there will be interruptions in the podcast next week. Newsletter will still go out, so subscribe to the newsletter. Remember, the newsletter is free. The majority of this stuff is absolutely free. You'll get notes from the pod every week, every day that the market's open. Every day I do a podcast, I do a newsletter. Even when I don't do a podcast, I'll try and do a newsletter with scans and some of these things that I see in the market. Just sometimes I'm a little bit busy and can't get to the microphone. So if you have any questions, any comments, any concerns, remember, hit me up here. Listen to me on Spotify. The newsletter link is right there. All the links are right here. So there's nothing that you can't find on here. I shouldn't get a question with, where can I sign up for the newsletter? Well, it's right there. Where can I listen to you on Spotify? What's right there? Where can I find your YouTube channel? What's right there? Where can I save $20 off my first month of phone service with Visible and pay as low as $5 a month? Right there. Right there. Takes you to Visible. Your boy here has Visible. I love this service. $20 a month? Are you kidding me? $20 a month for unlimited service. So, yeah, I like it. I like it. I like it a lot. The Trendspider sale is right here. All of the socials are up here. So follow, listen, support. Do whatever you need to do. Here, buy Apple on Webull. Sign up for a Webull account. Just buy Apple on Webull. You get, 10 free stocks these days? 12. Holy crap. 12 free stocks. Fund a Webull account. I got $1,000 in Webull. I don't trade in it much. I have a portfolio in there. It's not doing very well. I think it's only up 11% this year. 11% is bad, by the way. If you're making 11%, you don't have the right allocations. And I don't in Webull. So you can gift me any kind of gift that you want, blah, blah, blah. Sign up for Venmo. If you don't have Venmo, that's the way I prefer to get money. Venmo is. But yeah, if you have any questions, hit me up. Thanks, you guys. Have a great weekend. I will be back on Monday. And yes, I think it's only open for a half a day on Monday. So take care. Have fun.